Great. So we'll get started. Thank you very much for joining us on this lovely Friday afternoon. I hope everybody's well. Just as a quick introduction, my name is Dale Anderson. I'm the Managing Director at Fabric Property Group, and I head up the off-plan new homes division, Fabric Invest, and I've got my business partner and CEO of the group, Steve Jacob, on with us today. So great to have him here. He's usually driving up and down the country looking for the best possible investment opportunities for our clients. I've also got Peter, who is the co-founder and director of Happy Days and Onyx Real Estate, who are local professional lettings and management companies in the Northwest. So great to have you here. And today we're going to be talking about Liverpool. It's a city that's very close to my heart. I'm a Liverpool football fan, and I've seen the city grow strength to strength. Manchester's certainly, I think, been ahead of it in some sense, but Manchester has become quite a bit more expensive. So this year we have decided to turn our attention to Liverpool. However, we do want to make sure that we provide investors a service-led approach and make sure that they know all the pros and cons, what to look out for, what the risks are. And on that note, what I'll do, I'll just do a quick introduction. Steve, do you want to quickly have an introduction? And how's everything going?
Yeah, hi, I'm Steve, the CEO of Fabric Property Group. As Dal said, you'll usually find me in the car, driving around the country, looking for various investment opportunities. I have a broader idea of the markets because I deal anything from commercial to residential, mixed use, service apartments. So, happy to be here.
Great to have Steve on. So I'm the guy that once he finds a deal, I'll normally look at the due diligence and we'll deep dive and, make sure projects are funded. And also more importantly, and this is something I'll go on with Peter later, is the actual asset management, because it's not just about the properties being built and delivered and making sure they're in a good location. It's what actually happens after the completion takes place and you purchase the property. So without further ado, Peter, do you want a quick introduction to yourself and Happy Days?
Lovely. Thank you very much, Dale, and welcome everybody. It's great to meet you here today as far as webinar. My name is Peter Schrieversmann, originally from Germany. I've lived in the UK in 20 years now, most of that time in Liverpool. Liverpool is a very, very buoyant marketplace, both for tourism, for business of different shapes and sizes and property, which we'll touch on in more detail as part of this webinar. Happy Days Group, one of the businesses that I own is a specialist in managing properties, but particularly with a view to short and mid-term stay apartments. I'm also a co-owner of Onyx Real Estate, which is an organization that's with the more traditional management and longer-term tendencies. So when it comes to the former or the leisure market and contracts as short and mid-term stay, I hope to be able to answer all your, give you some insight into why Liverpool is a good place to be.
Thanks, Peter. I think there was a little bit of a signal issue, but we did pretty much get everything there. So Happy Days have been operating. Peter's been in Liverpool for 17 years. He hasn't quite got the accents just yet, but he's originally from Germany, as you can hear, and I'm actually originally from South Africa. So a very diverse panel here. We have Steve from the UK, from Chelmsford. We've got myself originally from South Africa. I lived in the UK for 17 years, and I've been in the UK real estate market now for 17 years. So lots of experience. Our main focus is to make sure investors are delivered good products, good build spec, and that properties are managed by experts who are local and near to the properties. So on that, we're going to talk about Liverpool today, why we believe Liverpool is our favored or one of our top spots for investment in 2024. The first thing is part of the Northern Powerhouse. There's been a huge amount of investments. As you can see, there's been a transformation of Media City. In fact, we've done quite a few numbers of buy-to-let apartments in Manchester over the past 5 years. Prices have gone up quite substantially. 30-40% approximately. However, one of the issues I think with Manchester now, Steve was mentioning earlier, Steve, in terms of Manchester prices, what are your current thoughts, especially in the off-plan market?
Well, current prices. So if you are a developer now looking to build in Manchester or Liverpool, you physically won't be able to build the properties unless your end values are north of £420 per square foot. So you won't see any new build schemes at less than that. And if you do, I would be very, very cautious as to whether them schemes can be delivered. So you're seeing prices now in Media City north of 450. We had a recent valuation from Avison Young that was at £472 a foot. On two towers, 550 units. If you go central Manchester, you're well north of 500 now. You're probably 520 plus, and Liverpool is at that 400 mark. And with these cities, they're still growing in population. There's still a lot of demand for these cities. So if these cities want to continue to grow and continue to build property, they have to be north. The properties have to be launched at north of £400 a.
Excellent.
That's what I'm seeing on the ground.
Okay, great. And yeah, as you can see, so Liverpool is more better value for money, in my opinion. And you can also probably, because of the pricing, achieve a better yield. So what are your thoughts, Peter, the difference between Manchester and Liverpool in terms of rentals?
I guess from just quickly checking there, can you hear me 100% now?
Yeah, you're fine now? Yeah, that's fine.
Perfect. Yeah, perfect. If I cut out, just give me the secret signal, please, and I'll change my internet option. Right, Liverpool is in a really, without going in too deep into the political structure of the UK, but obviously there's been a government change, and in fact interest rates have been lowered yesterday by 0.25%. The Labour government now, which is the government in charge in Liverpool as a city, and if you look at point number one, the major regional economy, Northern Powers, as part of that, the city region of Liverpool is governed by Labour as well, and now Labour has a central government in place as well. So Liverpool as a staunch Labour stronghold is very likely going to benefit a lot from that. There's a couple of big ticket projects, one which is not even on this list, the tidal barrage. For those who are not aware what that is, the Mersey is a tidal river, one of the only ones in Europe. And they are thinking of building a multi-billion-pound barrage that would use state-of-the-art technology, creating energy for more than 200,000 households in and around Liverpool, or lowering the bills of everybody. It's something that only exists in the Bretagne and in South Korea. It would be an international project that would attract an unbelievable amount of industry cluster to Liverpool, as well as the housing need that goes with that. And it becomes a tourist attraction in its own right, and it's up there for grabs now with the new government. And they are things that are not on this list because they're in the pipeline. Other big ticket items, as displayed on this slide and one or two slides later, really make Liverpool for current projects in the process, but also the football tourism. You've got the Beatles, the musical, cultural offering, the proximity to the sea, the Irish Sea, the Sis and the Mersey are very uniquely positioned in terms of, and it's got 4 universities as well, which I might add, and the international student population is growing and growing every single year. So I cannot speak highly enough about the mix of different factors that make Liverpool a really interesting place to be at the moment.
Great. And I guess the yields are higher in some sense than Manchester because of the price difference as well. So that's something to consider. So yeah, £5.5 billion Liverpool Water Visions. There's actually a website dedicated to that called liverpoolwaters.co.uk, and it talks about the planning that's recently gone in for approval for that to now start taking shape. There's another developer, Romel Capital. They're busy developing some projects where we sold some units all along the waterfront. So it's very interesting. I've been involved with Liverpool now for almost 10 years, but it's now all really starting to take shape. So in terms of the program, it's a 30-year vision representing one of Europe's largest single regeneration projects. It's headed up by a company called Peel Group. We're actually involved with some developments directly linked in Media City. There was another one in Kent. So you can see they are transforming some of these, maybe historically areas that became a bit run down, and they're making them modern with, new commercial offices, restaurants, John Lennon Airport. So yeah, lots going on there. And yeah, we are building dockside, which we're going to be going into today. And as you can see there, you've got the Liverpool M&S Arena. I think it was the O2 before. It's now the M&S Arena right next door, as well as the exhibition centre adjacent as well. In terms of capital growth, now there's no denying we've been in a not the most comfortable market conditions the past 4 years. Interest rates went up 12 times consecutively. We've had fairly high inflation, so that did affect some of the projections. But what we're not seeing, according to Savills' latest forecast, we're not seeing a subdued market like we've had, where prices might have dropped by 1 or 2%. They are actually forecasting now, they expect some capital growth up to 28.8% in the Northwest, which is leading the way across the UK. So a lot more affordable than in London. London property prices are very expensive. Your yields are quite low. So a lot of investors are turning their attention to the Northwest. Now that interest rates start to come down, inflation's gone from skyrocketing at 10% back down to 2%. I expect Savills will probably revise these figures again soon. In terms of Liverpool prices, as you can see, the last 10 years, I'm looking for some new data, but yeah, the prices have always consistently gone up. I was selling apartments back in 2012, about 100, 120. They're now selling for 200,000. In terms of the rental market, what has happened in the market, whilst prices have been subdued because of high borrowing rates, as well as government policy and taxes and things like that, what we have seen, along with food, gas, oil, everything's got really expensive, right? I mean, it's been pretty tough for some people in the UK on an average salary just to get by, because costs have gone up. And with that, we've had inflation on rental. As you can see, the Northwest now, the average rent is £1,127 per month. And your average rental yield on a normal let is 6.8%. So that chart there, I believe it's the Right Move latest house price forecast, which we can share with you after the webinar. What are your thoughts in terms of the market in the UK, Steve, and how's inflation affected things?
Yeah, so in about 2019, I was on Sky TV, and they asked me what my prediction was for the coming 10 years. And I think we all knew, anybody close to the market knew interest rates would have to go up. So I was spending a lot of time in the north of the country, and I was struggling to do deals in London. I couldn't do a deal in London. It was very competitive. Yields were low. I didn't find it that attractive to do a deal because I'm quite a yield-driven investor. So I said that I felt that interest rates would go up, London would soften significantly, but I expected that the residential market would stay pretty stable. That happened exactly as I thought it would. But what I didn't foresee was the rental inflation. It's been, crazy. I'm even looking at your screen now, Dale, and £1,100 as an average rental. So I think the biggest benefit with invest, because a lot of people investing should be looking for the long term. They should be looking to buy and hold. I think rental inflation now is baked in the cake. I think the governments are going to continue to debase the currency, and holding these sort of assets is good because you're going to get the capital growth, I can imagine, but more importantly, you're going to get that rental appreciation on a regular basis. So yeah, that's my thoughts.
And Peter, your take on your experience in the management sector in Liverpool, how have you seen the rental market, and have rents changed at all?
Yeah, rents have gone up. I would say that in the scheme of things, rents. If you look at the northwest of England, there will be a city like Manchester that is sort of pulling the average up a little bit.
Yeah.
A couple of areas lower than Liverpool, but Liverpool is still, again, it's as a tenant. When people move up from London, they sometimes chuckle a bit. They can't believe how much good value they get in places. Yeah. I mean, even in Manchester still to a degree, but less so, but certainly in Liverpool for their money. And so it's definitely on a journey. And I think, as Steve says, the rents are going to continuously increase. I mean, we had 2-bedroom apartments years ago that were rented to us to operate for something like £800 a month with 2 bathrooms and a car park. And that doesn't exist anymore. That's now £1,000 plus. And that is only a matter of 3-4 years that those things have changed. So more stock is being built, sure, including this building. But there is a hell of a lot of demand, because Liverpool, when you look at the place on a global scale with the brands that it has, that attracts people, both short term, which we'll talk about, for visits to the place, but also long term, when you've got a vibrant place with 4 universities in a great location, where when the sun is shining like today, it feels a little bit like you're on holiday, when you've got the seagulls flying around and you feel the ocean breeze. It's very livable, and it regularly ranks top 5 in Europe, never mind in the UK, for most livable and nicest places to live. And you can tell that.
I think one of the challenges has been, obviously, rents have gone up. For landlords, I guess it can be a positive thing, but interest rates have been quite high. And I was reading earlier, following the news that the Bank of England target of 2% inflation's been met, interest rates have been cut by 0.25% from 5.25. So I think in the current climate, the reduction does give a lot of relief and potential to start to stimulate growth. Because I think a lot of developers have also sat on the fence because of inflation. So that's why there's been a lack of new stock coming to the market. So it does bring some optimism back to the market. They're talking about an increase of 2.7 billion borrowing just in June alone. Some really interesting stats there. So we'll move on. Introducing dockside residents. So with inflation, with Liverpool, to be completely honest, in my last 12 years, I've had some very positive experiences, but I've also had some bad experiences. Developers that don't have their funding properly, they might be quite a new company with not a great track record, and things can be problematic when constructing buildings of 100 unit plus. So we have worked with a specific developer for a while, and they bought a building which is actually already completed and operational. They've gone in and made it very energy efficient. It's a prime location. I can't stress enough to clients when they say, oh, it's a bit more expensive than the other property. I look at the other ones and they're about 1 mile out of the city centre, whereas the dockside residence is a prime waterside apartments in the Royal Albert Docks. And of course, you've got a dual rental strategy, because you can do ASTs, which is your normal rentals, and then you can also do short-term rentals. So it's a prime location next to the exhibition centre and the M&S Arena. There's only 48 apartments. We released them a few weeks ago to the market, and we have sold, I think we're near on 10 sales. It's going really well. It will come fully managed by Peter and his team at Happy Days. So yeah, Peter, tell us a bit about, because you've lived in Liverpool for 17 years, right?
Yeah.
So tell us a bit about the area and what made this asset attractive, the building attractive to you guys.
Of course, we've got a track record with that building. Actually, we've known it for a very, very long time. When it was first built down that part of the docks, again, when you hear docks and big cities, if you're not from the UK, if you're from abroad, and just to give you a little bit of an understanding of the size of Liverpool, when you talk docks in London, it's miles and miles and miles of dock. Liverpool, you need to see like a semicircle on the River Mersey. and the city center sort of semicircle, you can walk it on foot in about 10 to 15 minutes, absolute max, top to bottom. So it really isn't the biggest city center. And the Albert Dock, or now the Royal Albert Dock, which in 2006, before Liverpool became a European capital of culture in 2008, in 2006 the docks were derelict wasteland. And then not only the Albert Dock was turned into a mixed-use scheme of leisure, residential, and office space, and the Tate Museum is literally, you can see the Tate Museum from the window of the apartment. But also next to it, they built an M&S Bank. They used to be called the Echo Arena, which is a local newspaper, but it's now the M&S Bank Arena, which attracts all the big acts and big events and sporting events and everything. Next to it, an exhibition center, and next to it, certain big hotels, including the Pullman Hotel. So the location could not be any better. So you are right in the city center, but you don't get the noise. You are not in a noisy area. Of course, when there's a concert on and it finishes, people leave, you will have a bit of commotion, but it's nice and quiet right at the beautiful River Mersey with the beautiful view. But if you say, okay, I'm now going into town, and you go via the Albert Dock, you walk 3 minutes to the Albert Dock and then another 5 minutes, and you are on Matthew Street where the Beatles first played in the Cavern Quarter in the heart of Liverpool. It really, I cannot stress it enough, location here. It's absolutely, you cannot be more central in Liverpool 1, which is the best postcode in terms of its proximity to the centre.
Yeah. Well, what I like to do when I do get a chance to go to Liverpool, I went to the site and then I walked from the site along the riverbank all the way up to L1 Shopping Centre. And yeah, it's just literally across the road, 10 minutes. You're in the city centre with all the bars and the restaurants and the nightlife and all the attractions. The famous Cavern Club. I actually used to be a part-time musician, let's say, and I played a gig at the Cavern Club. So as I said, Liverpool for me, it's got a lot of history, a lot of culture, and I just think as a city there is good potential. So Steve, you obviously initially drove and went and viewed the site, inspected it. As part of your due diligence process when you go see these buildings, what were your thoughts on the dockside?
I mean, I look at dozens of buildings. This is incredibly unique. It really is. I urge anyone to go and see it. Yeah, as soon as I saw the building, I wanted to get it under our control, so that ourselves and our clients could get it. It's the dock's been so beautifully constructed, and it's going to continue to be constructed all the way up to the Everton football ground, which is moving very fast, and the gap in between. But yeah, it was just, at the moment, off-plan is very nervy. To choose an off-plan developer, it's nervy. The good ones are sort of holding off a bit, waiting. There's a lot of new to market developers, so it's worrying. You're trying to find schemes, but you know, it's complete. It's on the dock. It's proximity. I mean, for serviced apartments as well, it is stone's throw from the arena. It's perfect for the strategy.
Yeah, they do a lot of events like the big concerts, right, Peter? Like Taylor Swift and all the big. Yeah. Okay. And then the
Dale, Steve, if I might add, and I'm just sort of thinking of it while we're on the call. But if any of you on the call fancy to have a tour of the immediate area and the building, or a virtual tour, I would be more than happy if you gave us your contact details after this webinar for me to personally organize that with you and just give you a little walk around, just so that you get that feeling for the area. Obviously, Google Earth is a great tool to do that too, but if you want that personal touch, I'm more than happy to make the time to take you through.
Definitely. It's definitely one you need to see. When Steve phoned me about the project, he was really excited, and I was like, oh, another project in Liverpool. Well, when I went there, I was very impressed. So just for time's sake, if you've got any questions and you're on the webinar about the project, for example, if you want to have an inspection visit, just put in inspection visit with Peter. If you've got any questions for Steve, just put Steve's name with the question. And if you've got any questions for me, you can just put Dale along with a question, and then we'll answer your questions at the end of the webinar. So I jumped forward there, just onto the credentials of the building. Something that has, of course, been, and the government's been under a lot of pressure, is to ensure that buildings are built better for the future generations, are more energy efficient. So when I reviewed the specification, I did notice there were some very good credentials to this building: photovoltaics for solar energy, high energy efficiency, electric heating systems, net zero carbon emissions. So it does have a very good BREEAM rating. And that, that is quite important with these types of builds. So from your experience, Steve, in terms of older properties versus new, how important is energy efficiency and, the eco aspect?
Well, the energy performance side of the market, very important to the funds now, like pension funds and institutions. They're not looking at anything sub A. They don't even EPCs B. They're, hands up against. Look, I'm open to seeing where the market goes, but you're future proofed here. So if the government do go that route, you haven't got anything to worry about. I can't say, I've got, across my portfolio, I've got C's, D's, EPC, C's. I had E's, but my bank forced me to get them down to a minimum of a D, or it would affect my loan. So that's the way the governments are putting pressure on the banks. But with this building, you're future proofed. So yeah, you're definitely seeing a lot more of it.
Right. So eco-friendly and built to the new government regulations, which I think they'll start to enforce more and more as time goes on. So that's good. So there's just a quick map. As you can see, prime location. You've got all the attractions, the exhibition centre, Albert Docks, the Beatles Museum. And in terms of the finished apartments, as you can see, they have been finished to a very high standard. For the initial investors that are attending the webinar or existing clients, the next 5 investors will get a free furniture pack included in the price, and also a £1,000 legal fee contribution. So definitely recommend going to view if possible. And in fact, there's 2 commercial ground floor units, and Happy Days are going to be moving in, I believe, into the commercial units. Is that right, Peter? So on-site management?
Yes, we've taken the units late last month, so I've been there this morning.
Brilliant. Okay, good stuff. So just to go through the numbers, this is your purchase price. It's a 1-bedroom plus study. Now, technically, if you're renting on a long-term rental, you can't, as I understand, rent it as a 2-bed. But am I correct, Peter? On short-term lets, it can be rented as a short 2-bedroom apartment. Correct?
Yeah, correct. Under current legislation, from a planning point of view, with ASTs, assured short-hold tenancies, you would only be able to rent the 1-bedroom because the other one hasn't got that window. But if you use it for touristic and leisure purposes, i.e. short and mid-term, i.e. less than 6 months, you are allowed to rent that out and maximize your investment as a bedroom.
Brilliant. Great. And I think, again, just to confirm, back to the green credentials, the EWS1 cladding issue after Grenfell was a big news story. So all the EWS1 certificates are in place. And, buildings being decarbonized is very, very important. So post the Grenfell, schemes do need to be properly built. So I do believe that from a developer's perspective, it's a very important. So on the rentals, on short-term lets, you're looking at a gross rent of £2,591. That's your year one projection based on, I believe, around 71% occupancy. You do need to consider your ongoing service charge management and utilities. We do have more detailed breakdown of the financials, but it can take time to run through it, which it'll show you what your council tax is, your energy bill, your Airbnb booking platform fee. But do you maybe want to just run through the projections, Peter, and how confident you are as a company to achieve these types of occupancy rates?
Sure. I mean, I'm ultimately the one with my colleagues who needs to achieve those numbers for you. And across the year, obviously every month there's peaks and troughs when you go down the route of tourism and business. There's a month like January that's maybe a little bit quieter than the month of August, and April and May are very strong in Liverpool. But over the year, these numbers are realistic. I have had a lot of conversations with Dale, Steve, and other colleagues before who obviously would always like to show let's say, the more optimistic view of it. But at the end of the day, we're the sort of people, hence our track record over all those years in Liverpool, that we rather promise something that is deliverable. And if there is more, then everybody is pleasantly surprised, but we wouldn't like to let anybody down. Talking through the numbers, I think these are very realistic. There's a couple of cost items that we can't necessarily influence. If the council increases the local council tax, which for the ones that are not from the UK is something that you might not be familiar with. But if you rent somewhere, or in your case, if you're the owner of a unit occupied by people like us, there is a tax to pay for being in that borough. And there's no borough in the UK you can go where you don't pay it. So it's not an advantage in one borough over another. You have to pay. And utilities go up and down, but we can only make sure that we are on the best possible tariff and change them as and when required. So we are onto all of those things holistically, and on a monthly basis, report back to you about all the information that you require to feel in control. If in between you've got any questions or any issues or any requests, or you actually say, you know what, I come to the UK first time in my life, I go to a Liverpool game, can I actually stay in my own apartment for that weekend? Well, it's your apartment. We will work it out with you. So we are here to work with you and be available to you.
Excellent. So the good news is, obviously, this is an energy efficient building with a PVS that will reduce your running costs. But things to be aware when you are doing service lets, which this is based on, the financials are for indicative purposes. The projections are based on high-level data analysis of current occupancy rates. So they can fluctuate depending on the nightly rates, depending on the occupancy. So year one, we are looking at around 7% net. But what I notice in year 2, 3, 4, 5, the occupancy goes up, the nightly room rates start to go up, and your yield gradually starts to go to 8%. By year 3, 4, you're looking at 8, 9, potentially even 10% net. Which is achievable because we have other buildings in Liverpool city centre which are currently achieving those returns. So if we combine our income, which is £17,781 net return, of course this is based on a cash purchase and not a mortgage purchase. However, if you take a mortgage, it is very much still cash flow positive. So 5-year investment scenario, you're looking at £88,905 rental income. Based on our Savills projection of 28%, you're looking at 67,000. When I looked at these properties, I did think to myself, these will be worth, because of the location, 300k plus in a few years from now. So that's your total profit. If you need more breakdown on those, we can break down each item. This is a 2-bedroom apartment, so that would be a full 2-bedroom, 2-bathroom with an ensuite. And on those, the rentals are slightly higher. And again, you're looking at minimum around 7% net income. So just to give you an idea, there's a dual strategy. Yeah? You can do normal rentals if you prefer. Some people don't really like to do short-term rentals. They'd rather just get a professional tenant in. So in terms of the ASTs and the normal lets, we're looking at $1,300 a month. I believe already a few of the units are renting at these rates, so that will give you a net return of 5%. However, if you do go down the short-term let, as you can see, you can boost your rentals by about 51% by going down that route and paying the management fee. Another thing to add, which I thought was quite good, I've been dealing with service short-term lets for 6-7 years now. They do typically charge 15%. I understand you guys are charging 12%. So is that correct, Peter?
Yeah, we've got a big footprint in Liverpool, and I've got a lot of economies of scale, which the non-local operators wouldn't have, hence them having to charge a bit more. So
excellent.
It's positive for potential buyers.
Great. So you've got two strategies. residential. Some of them are renting, 1,200 up to 1,500 on ASTs. And then you've got short-term lets. What's your favorite strategy, Steve? What would you do?
So yeah, I was gonna talk about this. So a bit about my story with serviced apartments. So back in about 2016, I was heavily investing in Blackpool, which is a seaside destination, and a lot of tired hotels. And I'd been on a course and I'd overheard what serviced apartments was, and I thought that's perfect for Blackpool because the accommodation was so poor. So I got educated on it, went on a couple of courses, got a coach who came to Blackpool and sat with my team, and I launched a serviced apartment management company, a bit like what Peter's done. I can only stress it was incredibly difficult to run the company, huge amounts of time and energy, and in the end, I didn't want to do it anymore, and I decided to shut the company down. It was really, really tough to manage. But now I've got a couple of people who give me a fixed return, which Peter would offer. I'm sure Peter would offer people in this buying these properties a fixed return rather than the fluctuation that can come with a management fee. So I went with a fixed return with some people, and I kept a couple of units, which I have in a managed deal with a local manager. And the reason I stuck with 2 is because it kept me under the VAT threshold. So the VAT threshold's now £90,000. So I would advise people probably 2 is a good number to keep yourself below that threshold. And I can honestly say, out of all of my properties, serviced apartments are great because the management company or the lease operator, they keep the properties tidy and clean because it's vital that they do, because they don't want the bad reviews. So I recently did an inspection on some of my serviced apartments in Blackpool, and they look better than when I gave them to the lease operator. He'd painted the walls, he'd done wallpapering, all the furniture he had was immaculate. That's his business, so he can't risk it, but becoming tired. And going on to happy days came to me. I work with a guy in Liverpool called David Hughes, and today every recommendation he's ever given me has been spot on. Like, he's never given me a bad recommendation, and in the property business, recommendations are so key. When this market started to take a hold in 2021, a lot of people were going for the nationwide operators. Now, being someone who had managed these before, I thought there's no way you can manage a nationwide business with this type of model unless you've got some seriously slick systems. So I always choose local operators that have been on the ground, like sat with Peter. He's got relationships inside the Pullman next door. He's got relationships inside the arena. So he knows the people on a friend basis. A nationwide operator just wouldn't be able to get that intimate relationship. So, it was 100% obvious Happy Days were the right choice. And that's why we chose them. They're local, lots of experience, highly recommended from someone I trust. And yeah, to sum up Dale's question, in my experience, service apartments have been one of the best investments I've made, but do consider taking a fixed return over a managed deal. And Peter will talk to you about that personally if you want to, because I've got both and I'm happy with both.
Okay, excellent. So there's a FRR lease sort of option, but in terms of you're absolutely right. From my experience, if you try and go and do it yourself, and maybe you're not full time in real estate or have time, it's very difficult. But if you've got a local company with local expertise, I think that's very important. So thanks, Steve. Thanks for your feedback on that. So again, we mentioned short-term let. There's both options, but you will get higher room rates per night, which will lead to higher yields. Dockside is in a great location. There is the Pullman Hotel. So if you do want to go on an inspection, I'm sure Peter will gladly take you for breakfast at the Pullman Hotel, and then take you around the site, and you can take advantage of the competitive Airbnb and Booking.com marketplace in a absolutely prime location, and use an experienced management company such as Happy Days. You mentioned, Peter, that you're also board of the involved with Liverpool Tourism Board, or give us a bit of a brief on your So how do you go?
Sure. I mean, again, picking up on Steve's point mainly there as well. I agree. I think to run something like this nationally, you must have very, very slick systems, which, to be fair, I need to have them as well. But you also have to have that reach and a local presence to some degree. There are certain aspects that are very hard to do if it's not local. One of them is pricing. Price things right. Of course, if you as a landlord say your rent is £1,300, it's £1,300, and you tend to review it when a tenant leaves. Maybe once a year you go over it. Is it still fair? Yes or no? We are changing our pricing every day. I've got someone working for me on north of £40,000 per annum salary, whose job it is to do nothing else but to look at prices every single day, compare with the local competitors, understand what events are coming to Liverpool, which is another big thing. How would you otherwise know what's coming to Liverpool? How a Liverpool game gets changed from a Saturday to a Monday has got a monumental impact on what you can earn that weekend, and so on and so forth. In terms of my involvement in Liverpool, I'm a chair of a couple of organizations that are there to make the place better, and I'm a co-director of Liverpool Hospitality Association, which is a group, the leading group in Liverpool, bringing together hospitality, i.e. Restaurants, bars, cafes, hotels, service accommodation providers, to talk with the council, with the police about issues in the area, and potential events in the area, and which leads ultimately to everybody doing better. The more vibrant and the more safe and the more beautiful Liverpool is, the better is for all of our and your investments. And that's something that we as a company, if you Google us, you will see it, are involved with quite a bit as well.
Brilliant. That's great. So real local expertise there, knowledge, and I believe that's important. There are a lot of these management companies lately, they have the remote model. Some of them are good. I personally believe in a bit of a hybrid remote for certain instances, but I think when it comes to something as important as managing the property, you need to understand the local market, and you need to be able to pull in the crowds and the business. So great. So next steps, if it's something of interest, you can select an apartment, reach out to a consultant, just put in the chat yes, and then we'll make sure that someone gets in touch with you, send you the information pack. You'll sign and reserve a reservation form. You can, during that time, also go and inspect the site or arrange an inspection visit to the UK. We can show you various different options as well, so not just dockside, but I think you will. We've had some clients recently, they once a property in Manchester. I think, Steve, tell us a bit about that, Steve. You had someone come over and they had an idea of buying in Manchester, and what happened?
Yeah, I think he's on this meeting. Yeah, he is. Hi, Peter. Yeah. So we had a client fly over. Oh, God. I slipped me now. Where's flying from?
From somewhere.
I do these tours regular, and it was just before we'd launched Dockside, and we were looking, around Manchester, and I knew we were coming into the summer as well, and I don't do a lot of tours through the summer because I spend a lot of time with the children, and I had to get Peter to the building, and you have to go there to really understand it. And Peter, as soon as he see it, he could see what I could see. One thing I would say, Peter, from Happy Days on this call, he is open to showing you around Liverpool, showing you the properties. If you can stay over in Liverpool for a night and go out into the city centre and get some food and have a walk around and take that time with Peter. Look, if you don't buy, I guess everyone here understands that. It's about building relationships, but just go and see it. Liverpool is a fantastic city. It really is a fantastic city.
Brilliant. Yeah, no, I agree. It's always been one of my favourite cities indeed. So a couple of questions just so we can land things. And I'm sure it's getting a bit late on a Friday and maybe want to get out or go see the kids or carry on working. It's up to you. So a couple of questions we've had in. One's come in here from with Steve's great insight into where the market was going. Does he feel there will be another mortgage drop before the end of the year?
Yeah, I went and see a public markets guy earlier, and I asked him the question. If I'm honest, he's a lot more experienced than me. He's been in public markets for 25 years. He expects to see another quarter point reduction. I was watching Jeff Dunlop. So Jeff Dunlop is the bond king, billionaire. I watched him today for 20 minutes straight after, because in the US they didn't cut rates, and he still predicts that there'll be 1.5% of rate reduction in the US over the next 12 months, which that's great for us as property investors. Getting hold of that money as cheaply as possible.
Great. Yeah, I expect the same to follow. As long as they can keep inflation up and stable, and there are some economic and geopolitical things to consider, but it does seem like we're moving in the right direction. So I've got another question for Peter from Onisimo. Thank you so much for the webinar. I want to know if your company has a rent-to-rent product for someone interested in that kind of product. I'm in Canada, but interested in investing in UK property markets, but starting off with a rent-to-rent. Is that something?
Yeah, I mean, the majority of our business and how we grew was on rent-to-rent. There's some management became part of it. So rent-to-rent, we are very, very familiar with. It's how we started. And I guess it goes back to what Steve said. We are more than happy if you have got a slightly different risk tolerance. Let's say you want a little bit more certainty, even if that means that the yield is somewhere in between the conservative and the more risky open model. More than happy to discuss it. So yeah, rent to rent is could be on the table as such. Sure.
Okay, great. So another question I've got coming in here is this the only?
Shao, before we jump off that question, can you ask the guy who asked that question, is he looking to buy a rent to rent deal, or is he looking for somebody to give him a fixed return on this type of property? Can he clarify that in the chat?
We'll see if he mentions in the chat, but then we'll actually get in touch with Onisimo after this webinar, and then we can have a further discussion.
I'll put this point out there. People who buy rent to rent deals, I very rarely see them work because you buy the deal as a rent to rent. You then give it to Peter from Happy Days to rent it. So the landlord's got his hand in the pot. Peter's got his hand in the pot. By the time it gets to you as the person with because you're the last person to be paid. So usually there's not a lot left in that pot. If you're buying a rent to rent deal, this is why I wanted him to clarify. Because recently, in one of my buildings, I saw a property manager like someone like Peter over in another part of the country. They sold rent-to-rent deals in my block, and all of them failed because of that reason, because the manager had to be paid, I had to be paid, council tax had to be paid. There just wasn't enough in the pot for the person who bought the deal. So,
well, that's fine. I mean,
you're out there buying to rents.
That's why we've got a team of senior consultants and myself and Steve. So Onisimo, we're happy to jump on a call. We can discuss that and help educate you on that. That's fine. So the next one we have here is, you said you've sold 10 already. Is there a limit on a number of units you can buy? Of course, there's not a limit, depending on the price or the offer that's put forward. You can buy as many units as you want. And another question for Peter, are any units currently being rented on short-term lets at the moment, and how full are they?
Yeah, we have started to take units on. In fact, it's all very, very recent for this particular building. We started last Thursday. We started to advertise it less than 2 weeks ago. Had the first guests arrive last Thursday and were full last weekend. To just give you an idea, for a listing with no reviews, brand new to the market, for guests to jump on it that way, is either because there's a high demand or because I get my pricing spectacularly wrong and sell it way too cheap. And it's definitely not the latter. So it's a good start.
Gotcha. Okay.
And then going back to your other point, Dal, the guy that asked the question, we've got someone in the pipeline looking at 5 units, haven't we? And we haven't really gone out to our full network of agents. If we did, this would be gone in a matter of weeks. Yes. But we, of course, like to keep these units to ourselves as a business and for our own customer base first before we reach too far out into the market. So,
great. Excellent. So Onisoma did say, thanks very much, Steve. That was very useful. He isn't quite sure how it works. That's why I asked the question, but he's keen to get more information and be happy to have a call with someone on our end. So thanks for that. So yeah, I think that's it for now. Any other questions? Yeah, I think we've been going almost an hour. So we will record the webinar. If anyone else does have any questions, please do drop it in the chat. We will, if you want to get a free information pack on Dockside, please put yes in the chat to getting a brochure. If you do want to arrange an inspection visit to go see apartments, just put inspection visit in the chat, and we can arrange that. So yeah, is there anything else yourself or Peter wanted to add, Steve, while we're on?
I'll just ask Peter a question. In your experience, Peter, comparing a dockside type property on the river to something maybe half a mile inland, what's your opinion? Rental wise?
Absolutely. I think in Liverpool, if we stick with Liverpool, we've got at the docks and that position right next to the arena and Royal Albert Dock, you are enough away from the say lively part of the city center to not be inconvenienced by the noise that goes with city center living, but you are right in the city center. We've got property that we manage, some which we lease in Matthew Street, which is the world famous street where the Cavern Club is, where the Beatles first played, which are fantastic for a big group of lads or girls to come at the weekend for a party weekend in Liverpool. But you wouldn't be able to live there because it's just too loud and too busy. So in Liverpool's case, I would say there's 2-3 blocks around the docks positioned like this. For a city like Liverpool, that's not a lot, and they're extremely popular. The majority of if you go to the outer ring of that sort of semicircle of Liverpool, and again, if any of you want to dive a bit deeper into the geography of Liverpool, the ins and outs, the do's, the don'ts, I'm happy to make the time. You very quickly on the map, for somebody who's not from Liverpool or even from a bigger city, let's say you're from, from Beijing or somewhere where half a mile is nothing. For Liverpool, half a mile is a long way, and you can very quickly find yourself on the edge of the city and not the most desirable part. So this is the place to be.
Yeah, it's a very condensed population, isn't it? Definitely. Very condensed.
Of course, suburbs, Liverpool, just briefly to give it a tiny little bit of context, Liverpool's urban area is about 900,000 people. The real Liverpool city sort of area is more around the 500,000 people mark. The city center is less than 100,000 people, the actual core city center. So it's as Steve says, it's quite condensed and very vibrant as well. Once you zoom out and let's say you like your football and you like Liverpool Football Club and Mo Salah, and you zoom on where the stadium is, you can get, of course, you can buy property around there. Not of this quality, but you can. But you are going to be in an area that doesn't even have a restaurant for people to go to, including yourself. And that is only actually a 35 minutes walk or 8 minutes drive. So Liverpool is a very condensed place, and the docks are safe and very desirable place to be.
We have someone currently as well, Dale, just to touch, and if there were any Liverpool fans, they're buying one of these so that when they fly over, they've got their own apartment. But between them being able to watch the games, they can give it to Peter to earn some money out of. So, that was a good deal for that guy.
Well, that's what I like about that. I mean, if you're a fan, it makes sense. You're getting a return on an investment, and then you've got somewhere you can actually stay as well, in a great location when you go to the games. So Definitely. So, yeah, thank you everybody for your time. Just so you know, Fabric Property Group, we are whole of markets. We take a service-led approach. So we do look at things like recommending the right solicitors, making sure you recommended the right letting management companies, but also coming up with the right structure and a wealth plan for you. So if that's something of interest, get in touch. We can discuss in in-depth detail on your current situation, where you are in life, have you got kids, what you do for work. We'll ask you a lot of questions, but we need to ask the questions so we can provide you with the right solution. Not one size shoe fits all. So we believe in taking a holistic approach. We've got off-plan, new homes, HMOs, freehold and commercial blocks as well. So that's part of the team of experts, is to make sure that you get the right service before we actually put you into a specific product. So we're not tied to one developer. Yeah, that's it from me. Anyone else? Peter, Steve, anything else you wanted to add?
Thank you for the invitation, Dale.
Brilliant.
Yeah, and get yourselves over to Liverpool and have a look around.
Definitely. Good time of year to go. Excellent. Thanks for your time, guys, and appreciate
Thank you very
attending.
much. Thank
Enjoy
you
your
for
weekend.
making the time.
Thank
Hope
you
you
very
enjoyed
much. Take care.
Take care, guys.